Hi, this is PR Sundar. Welcome to this special episode where I'm going to talk about STT and stamp duty. I trade in US markets, one of my friend's accounts. There are only two charges. One is the brokerage, the other one is exchange charges. There is nothing else. But in India, if you want to trade, you pay brokerage, you pay STT, you pay stamp duty, you pay clearing charges, you pay SEBI charges, you pay exchange transaction fee, and then you pay GST and some of these charges. And too many charges. The cost of transaction in India is one of the highest in the world. And if you want to trade in SGX Nifty, you just pay only two things. One is the exchange transaction fee, the other one is brokerage. And many brokerages, they are very, very competitive in US. There are many brokers who offer free brokerage. They don't even charge any brokerage. And it's only the brokerage, there is no GST on that. So, India is already, the charges are very high. And if you look at STT, which is called Security Transaction Tax, so that money actually goes to central government. At least the STT is only on the sell side. Buyers don't pay STT, seller only pay STT. But if you buy, you have to sell it, right? I used to remember a joke in a Tamil movie. A doctor will say, for putting the injection is 10 rupees, for removing the injection is another 10 rupees. So once we put the injection anyway, we have to take it out. So the charges will be 20 rupees. And of course, people sometimes who buy and that option goes to zero, they lose the entire capital and then they don't have to buy. But in that case, they are losing the entire capital. So that's very sad. STT is at least on one side, but whereas stamp duty is actually on both the sides. Buy side also you have to pay stamp duty, sell side also stamp duty. Although these are small charges, but small charges, many charges add up to huge amount of transaction charges. And I pay lakhs and lakhs of rupees in these charges. First, let us look at the history of this security transaction tax. I don't know who found out. There is no other country where there is this kind of tax. So first, the people demanded the long-term capital gain tax should be made zero. Earlier, there was a long-term capital gain tax. The people demanded long-term capital gain tax should be abolished. During Congress period, I think P. Chidambaram was the finance minister. So they made long-term capital gain tax as zero. Then they said, because we are removing this long-term capital gain tax, so the government will lose some revenue. In order to compensate that revenue, we are introducing a new tax called securities transaction tax. The first thing is that logic itself is totally wrong. Why totally wrong? People who make profit, they only pay the long-term capital gain tax. And people who lose, they don't pay any tax. But when it comes to security transaction tax, whether you make profit or loss, you still have to pay. So even you buy a share for 1000 rupees, later, in panic, you are selling for 900 rupees, you still have to pay the security transaction tax. So that is totally unfair. People make profit, they don't mind paying tax. But people making losses also have to pay. So that's one thing. Second thing, as the name suggests, what is the name? Security transaction tax. It is a tax. So when this tax is paid, it should be adjustable on the final payment of the tax. I'm just giving an example. Let us say every day I'm paying 1 rupee as the security transaction tax. So in one whole year, I paid about 250 rupees as the tax. That's a 250 rupees security transaction tax paid. It's a tax paid. So let us say at the end of 1 year, let us say I have 1000 rupees profit. For 1000 rupees profit, I have to pay 30% tax. That's about 300 rupees. Since 250 rupees has been paid as a security transaction tax, so logically, I should pay only 50 rupees as the tax. Because the 250 rupees has already been paid. So this was the case earlier when the security transaction tax was introduced. But later, after few years, so the Congress government has removed this facility. No, the STT paid is paid. 250 rupees STT you paid, that's it. You cannot claim any exemption. At the end of the financial year, if you are 1000 rupees profit, you pay full tax for that. Then what is the point of security transaction tax? That was something very bad. What has happened after many years? The BJP government came, they reintroduced long-term capital gain tax. So now there is a long-term capital gain tax. So STT was introduced, why? Because long-term capital gain tax was removed. But now long-term capital gain tax has also come, STT has also come. STT is not removed. Forget about STT not being removed. STT for option segment was increased from 0.017% to 0.05%. That means in the year 2016, it was increased almost 3 times from 1700 rupees per crore turnover to about 5000 rupees per crore turnover. It was almost 3 times increase. And now this year what they have done, again they have increased from 5000 rupees per crore to 6250 rupees per crore, which is 25% hike. That means from the days STT was introduced and this day it's almost 4 times increase. Long-term capital gain tax, so in lieu of that only the STT came, but now long-term capital gain tax is also there. The STT also increased 4 times for option segment. Why? Reason very simple. Everybody do options trading. 90% of the volume in exchange happens in options. So the government asks for more tax. In the last 2 years, FIIs have been continuously selling our markets. In fact, as of today, 2023, from January until now, the first quarter, the worst performing market is the Indian stock market. But despite that, there was an increase in STT. And not only that, for the last 2 years, FIIs have been selling continuously, and it is the retail people, the new investors who came to the market fresh in the last 2 years have been supporting the market. Now those people are given additional burden. What the government thinks, by increasing the STT by 25%, they are hoping to gain 25% additional income. But whether that is going to happen or not, only the time will tell. The reason, because of this increased charges, the people can tend to lose more. They may even get out of the market. In that case, whatever they are already paying, they may not pay. There is a point at which, there will be more volume, and so that will give you more tax, but percentage may be less. But at some point of time, the people will think of some alternates. Say for example, in my case, I am planning to stop trading totally in Indian markets, and I am planning to move completely to US markets. So, the people may do this kind of things. Ultimately, the government may not be able to gain the kind of increase that they are expecting. Less is more, more is less. So I hope the government understands this meaning. And as per SEBI report, nearly 90% of the people lose money in stock market, and half of the remaining people, they barely make any profit. Maybe 50,000 rupees per annum or something like that. On top of which, the increased cost of transaction will add more burden. This increase in STT is definitely, how I would put it, it has come at the wrong time. Maybe when the markets are bullish, when people are having with good profits, if some increase in the tax, people, they don't mind. But in the worst performing market, FII keep on selling, FII keep on fleeing the Indian markets, it's only we are depending on the retail people to support the market. At this juncture, this STT is, I would say, is really a pain point. So let us hope the government listens to us, and they may do something in future. So hope you enjoyed watching this video. Thank you for watching.